Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Brian Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch in the Nasdaq 100. Of course, we're talking about technical levels. Brian, it's great to see you as always. Welcome back to Trade Talks. And it feels as if the theme this week, everyone's focused on Jackson Hole's, basically in the absence of earnings.
Yeah, a lot of chatter, particularly now within the, mid to late August, summer slowdown in the marketplace. And so Jackson Hole is always something to look forward to at the end of the month each year. This year's title for the Jackson Hole is Structural Shifts in the Global Economy. And so I have to think that, that part of that at least is referring to, what's happening with interest rates, not just here in the United States, but the rise in rates across the globe.
And let's take a look at that. I mean, we've seen the highest level, particularly in yields, since 2007 here.
Yeah, so this month we've had a new uptrend higher in rates, here in the United States, overseas as well. I think it really all started the ball rolling with the move higher on July 28th when the Bank of Japan announced changes to its yield curve control policy. And then on July 31st, just a couple of days after that, the Treasury released its quarterly funding report where it was forecasting now $1 trillion for the 3 months between July and September of issuance versus the prior guidance of 733 million. And then just a day or two after that, we had the Fitch U.S. credit rating downgrade. And then there's also been some a lot of news coming out of China with their concerns surrounding their real estate markets and their currency weakening, and what levers they have to pull to protect that and defend that. So there's been a lot of structural pressures and a lot of cyclical as well, particularly in recent weeks, which seem to explain what this move higher has been in rates. So we're looking right here now at the 30-year Treasury yield, which is today breaking out above its prior highs made back in October of last year. The 10-year yield just barely made a prior high, peaked at 4.35%, the prior high from last year at the same time. 4.34%. That rise in rates has also coincided with this move higher in the US dollar, which had that false breakdown back in mid-July and then went higher for 5 straight weeks. And as you can see in the weekly period, it's running right into its 40-week moving average and that declining trend line going back to the fourth quarter of last year. If we zoom in a little bit and look at that daily period, we can see there's some pivots along the way that coincide with the trend line in the 200-day or the 40-week moving average. So there's that cluster of technical resistance there, and that has coincided with the risk off we've seen in the broader markets and the equity markets.
And Brian, how's this impacting levels on the Nasdaq 100? We know, higher rates can be a challenge for many of the tech stocks within the index. It had a great start to the year. It's up over 35%. Have you seen any change in posture over the past couple of weeks?
Sure. So we've as you know, this 50% of the index is in the S&P technology sector. Technology is 50% of the Nasdaq 100. Looking here at the S&P 500 technology index, we could see this peaked right around when we saw, those reversals in rates and in currencies and the dollar. And really the big move was back on July 21st. We had this, very classic topping pattern, doji pattern here, gravestone doji is referred to after this strong uptrend. The following week was higher, so it didn't really have that downside confirmation, but then we saw it in the first week of August, and that coincided with the events from Japan and for Fitch. And so we've been down now 3 straight weeks in a row. Today we are higher. NVIDIA and Tesla is leading the way to the upside today. So, we still remains to be seen, if the downtrend is done. August and September, typically the weakest months of the year. We look at the RSI momentum readings. We are pulling back from overbought levels. So nothing from there looks too concerning. We're still at about 59. So that's okay. Again, we're looking at the technology index. If we want to, zoom in or cross over to the NASDAQ 100, somewhat similar. We had a topping pattern in the NASDAQ 100 the same week, slightly different look to it, but very similar. And then 3 straight weeks to the downside and a little bit of strength today. Again, the RSI here on the weekly basis is 60. So we're seeing some, expected, consolidation after what was, 7, very strong months of performance for the NASDAQ 100, especially. It had its best first half ever on record. And so at the moment, we could chalk this up to some, healthy digestion. However, when you do see, the strong move higher in interest rates, the dollar is getting higher as well. I think if we see continued moves to the upside in both those two asset classes, then I would expect that the headwinds for the equities to continue.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.